Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us. Don't forget to like and subscribe and click the bell so you get a notification of when we're releasing a new video. I'm sitting today again with Michael Porter. Hello, Michael.
Morning, Robin.
So, Michael, last week, we've talked a lot about the fact that interest rates are something we watch. We had both the Fed and our local governor talking about interest rates, and in both cases, it was no movement. One expected, one a bit disappointing.
Yeah, I think overseas was expected, Robin. I mean, it wasn't, the Fed wasn't expected to cut rates given obviously all the tariff changes, and they were basically still pointing to two rate cuts this year, which I think the market was in a way quite happy with. But definitely, I mean, we'd probably only get a rate cut in the US May or even June, depending on how things go in the next couple of months. Locally, I think it was a bit disappointing, Robin. We had inflation on Wednesday. Inflation was 3.2% year on year. Now, bear in mind that the Reserve Bank's target is 3 to 6%. So we were right at the low end. Core inflation, which takes out sort of petrol and food, also came down a little bit. And so there was definitely scope to cut rates. There's no doubt about it. We know the Reserve Bank is very cautious. So interestingly, the vote was 4 people for no cut and 2 people for a cut. So it wasn't sort of unanimous that there was no cut. There obviously was quite a lot of discussion, but one just, I mean, they're sort of rightly cautious. They don't know what's going to happen. There's a lot of rhetoric going around in the press about SA at the moment, and there's a lot of foreign policy uncertainty. So you can understand why they're a bit cautious, but sometimes when they're too cautious, they almost miss that window of opportunity to cut. And then by the time the next meeting comes around, circumstances change a little bit, and then that window is closed, and then we don't get a cut. And I don't think anybody would disagree that we really do need to boost growth in this country. So probably a concern is that just at the margin, growth expectations are being revised downwards for this year. And even in the budget, which we commented on, the government's got forecasts for GDP growth in this country of 1.7 this year, I think 1.8 for the next 2 years. Now, the government's talking 2-3% GDP growth. That's what the GNU is talking about. But they're not putting that in the budget. Which on the one hand, you can say, well, that's good because the budget's conservative and there's room to overshoot. But on the other hand, you say, well, why aren't you believing your own story? So I think there was an opportunity to miss to possibly cut. I mean, 25 basis points is small, but it would just cemented some of the momentum that we've got going.
Michael, I think, given where we were with the budget and we see, the pain for taxpayers, the cut in interest rates could have eased that a little bit. That does speak a lot to independence of Treasury versus government, doesn't it?
Yeah, it does. I mean, I think the Reserve Bank is independent. They do what they need to do, and I have to say, I think the Reserve Bank has always been a very credible institution, and monetary policy is, I think, has managed extremely well in this country. So sometimes we can get a bit frustrated, but you'd rather have it that way than the other way around. I mean, look at what happens in places like Turkey and things when you don't have an independent central bank. So I don't think you can complain about that. And yes. I mean, a rate cut would have obviously, the bracket creep is kind of quite material in the budget. 18 billion of essentially extra tax because of no adjustments to the brackets. And the only good news is that we should see a reasonable cut in petrol prices coming up in April, and hopefully that will further take the pressure off inflation and give the Reserve Bank scope to cut in May. So I think the chances of a cut in May are good, providing foreign policy doesn't unravel in the interim.
Yes, Michael, the other thing, just changing direction a little bit, we had, 12 hours of load shedding Thursday to Friday. But I see over the weekend they've added another unit of Kusili into the grid.
The Unit 6, the last one, Robin, I think. And I mean, sure, I don't even know when Kusili was started being built. Was it probably 2011, 2012, somewhere around there? And 13 years later, this thing's sort of finally coming on stream. So listen, that's good news. The odd little bouts of load shedding that we've had this year, we always said we didn't think load shedding was completely gone. There was always risk, but By and large, I mean, obviously load shedding is short, and it's for has been for short periods of time if there's been an issue. So yeah, if we're bringing Kusile Unit 6 on, another 800 megawatts, obviously essentially brand new, should be reliable. Should I say that guardedly, but it's obviously good news, and I think it also just speaks to maybe some of the operational improvement that is going on at Eskom, and I think some of the senior management changes, the CEO and the chairman that they've got at Eskom are, and I mean even the Minister of Electricity is them. I think there is a new level of accountability at Eskom that wasn't there before, and I mean Robex, where you're talking now Monday morning, Robex just released a trading update this morning. In there, they were also commenting that their quarrying business, which we've also seen from Afrimat, is busy because of work from Transnet and ballast and repairing rail lines. So, at the margin, we're coming off a low base, but that's always what we say, Robin. I think there is improvement going on, especially at some of the key institutions that are enablers of future economic growth. So, I mean, at the margin, it's good news, but we need to see it translating into some improved confidence from the business sector. And I think this foreign policy uncertainty and what Trump's doing is probably undermining some of that momentum at the moment. But as it is globally, I mean, we're not alone in that. I mean, everybody, no one knows where they stand at the moment.
Yeah. Michael, I mean, if you wanted something to make South Africa a really sort of optimistic place from a democracy point of view, I see that you mentioned Turkey. Eric jailed his fiercest competitor over the weekend as well.
Yeah, exactly, Robin. And, big protests and things like that. But I mean, Turkey's often hailed as a I don't know, model for other countries, and it's obviously a big country. It's quite strategically located, and yet they have they have a lot of domestic issues, and quite autocratic. A very different style of government. So I mean that's one of our big competitors in terms of emerging markets. Indonesia, Brazil, Turkey, those kind of countries are key competitors, and I think sometimes it's nice to look around and know that. Not we all alone, that we're not alone. I think our governance in key institutions is a lot better than that. But I don't think we often give them credit for that, unfortunately, especially in the Treasury and the Reserve Bank.
Or in the general public, that's really. Thank you, Michael. Thanks for giving us that insight. Thank you for joining us. Don't forget to like and subscribe, and we'll catch you next time. Bye-bye.